My dear friends, welcome to Rajashekar classes. This is lecture number 84. In this lecture, we will try to understand about exponential moving average, that is EMA, in stock market technical analysis. First, let us try to understand what is EMA. The exponential moving average, it is a popular technical analysis tool used by traders and investors to smooth out price data and identify trends in financial markets. Unlike the simple moving average, that is SMA, the EMA places greater weight on recent price data, making it more responsive to current market conditions. Why use EMA? Let us try to understand one by one. First one is faster response to price changes. The EMA gives more weight to recent data points, making it more responsive to sudden price movements compared to the simple moving average, that is SMA. This makes it ideal for identifying trends and reversals earlier. Smoother trend line. Unlike the SMA, which can appear choppy during volatile periods, the EMA smooths data while still maintaining sensitivity to recent changes. This makes it easier to spot trends without excessive noise. Effective for short-term trading. How it is effective for short-term trading? Traders often use EMAs with shorter time frames, that is 10 days EMA, 20 days EMA, to track quick price movements. This is popular in day trading and swing trading strategies. Stronger signal for crossovers. The EMA crossover strategy, where short-term EMA crosses above or below long-term EMA, is widely used for generating buy and sell signals. Anyway, we'll try to understand those things. Weighted for relevance. Since EMA emphasizes recent data more heavily, it's often seen as more accurate for current market conditions, especially when reacting to breaking news or sharp price swings. Let us try to understand. Let's understand one simple example. Let me say I have a data set like this. Given data, these are closing prices for 10 days. What are the closing prices? Just you can observe. For day 1, what is closing price? 22. For day 2, closing price is 24. Like that, I have closing prices for 10 days. Now I have to calculate EMA. Since EMA requires starting point, we will use SMA for the first EMA value. How can I calculate SMA? We know that how to calculate. Just I am adding all the closing price data for 10 days and dividing with the 10. Therefore, I am getting 26.5. This is SMA value. But why we are calculating? Why? Because since EMA requires starting point, isn't it? We will use SMA for the first EMA value. Means SMA value is the first EMA value. That's what it says. Your SMA is 26.5. Therefore, your EMA first value is 26.5. Calculate the EMA for 11th day. How can I calculate? Assuming closing price for 11th day is 32, smoothing constant alpha, that is 2 by n plus 1. Here n means number of days. 2 by 10 plus 1, 0.1818 is smoothing constant. Now what I have to do? I have to calculate EMA for day 11th. Assuming closing price for 11th day is 32. How can I calculate? I already discussed about smoothing constant. Now EMA day 11 equal to price day 11 into alpha plus EMA day 10 into 1 minus alpha. We know all these values. Just I am substituting. What is this price on day 11? That is 32, isn't it? That's what we discussed. That is 32, isn't it? Into alpha. What is my alpha value? 0.1818. EMA for day 10. Just go to previous slide. You have that value. 1 minus alpha. Just I am calculating this. If I calculate this, what will I get? I will get 27.5. That is EMA value for day 11th. In similar, just that is 27.5. EMA for day 12th. The closing price for day 12th, I am assuming 33. How can I get EMA value for day 12? Just I am again substituting price day 11 into alpha EMA for day 10, that is 27.5 into 1 minus alpha. What you are getting? EMA for day 12 is essentially 28.49. Step 4, continue the process for each new day. Repeat the formula iteratively to compute the EMA for subsequent days. This is the procedure to calculate. Here what we can see, EMA responds quickly to recent price changes. The jump factor 26.5 to 28.49 for just 2 days. Just observe previous values so that you can understand. EMA values are smoother yet reactive. That is important. EMA value smoother, reactive, making it is ideal for trend identification, isn't it? That's what it says. Just go through this lecture. If you have any difficulty, please keep a comment. I will continue this discussion in my next lecture also. Thank you so much.